Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Ruth Crowell, CEO of LBMA, the preeminent standard-setting body for the global wholesale market for precious metals. We're going to discuss trading data and trends in gold. Ruth, it's great to see you as always. Welcome back to Trade Talks.
Nice to be here, Jill. Thank you so much. It's been some exciting markets, so delighted to give you some updates.
It certainly has. A lot has happened in the past few months since we met last. And of course, inflation is one of the macro themes that we need to take a look at. Have the high inflation numbers that have been recorded in the U.S. had an impact on investors' appetite for gold?
Absolutely. Gold is a go-to hedge against inflation, and that's certainly been reflected both in terms of the volumes that have been traded here in local London, but also in terms of the metal stocks. We actually have an all-time record high in terms of the amount of gold sitting in London underpinning all of that trading activity. And I think in terms of investors, there's certainly a fear that world inflation is going to be around for some time, and that's sending them towards gold. But I think that's not helped by central banks being a little bit slow to increase interest rates in line with inflation. Though I saw we had some good news from the US Fed overnight. And just recently, the Bank of England announced today that it will be putting rates back up to pre-pandemic levels. So while some good news, I don't think that's done much to really abate fears that inflation is going to be around for a while. And certainly that's turned into more interest in and more trading activity in the London market.
And 2021 proved to be a poor year for gold, with the price falling some $100 from January through December. How has the metal fared in the first few weeks of 2022?
So the gold price started the year at about 1809, and through the first 7 weeks had a relatively steady trajectory upwards. So gaining 4.7% to 1893 on February 18th. And part of that was the inflation argument. It was also the stock market turning negative, inflation coming to bite people's appetite for tech stocks. But I think also, as we're all hopefully coming out of pandemic and moving to endemic, central banks announcing that these massive financial stimuluses were coming to an end. And that was making gold more attractive as an asset class, given the stock market wasn't as attractive as it had been previously. But I think the biggest impact, certainly on the gold market and the price story, is when we started to see Russian troops camped on the border of Ukraine and the invasion, which happened on the 24th of February.
Right, and I agree that certainly is the big story. So I have a couple of questions for you here as it relates to the market. How did the market respond to the ongoing crisis in Ukraine, and how did LBMA respond to the imposition of internal sanctions on Russia?
So throughout history, gold has never been slow to respond to geopolitical turmoil as investors rush to safeguard their portfolios. And the last days of February and the first half of March proved no exception to this. From February 24th, the price rose dramatically and actually exceeded 2,039 on the afternoon of March 8th. And that's only $18 shy of the all-time record. The record price, if you can remember back 2 years, because it does feel a long time now, to August 2020, when there was no successful vaccine on the horizon, and there were real concerns about the long-term state of the the global economy. You saw the gold price break through that 2000 record to the all-time high. So it's been very interesting to see the impact with regards to the geopolitical turmoil. I think since that high on March 8th, you actually have seen investors taking some profits, as well as gold being used as that go-to high quality liquid asset. So it performed the same way as it did in the COVID crisis, where people went to the precious metals gold market to cover margin calls because they needed to cover other aspects. So really seeing gold play that important role as a hedge against inflation, but also as a safe haven asset and a truly high quality liquid asset. Turning to LBMA, like many other institutions around the world, we responded quickly. We removed 3 Russian banks from our membership, and we have recently suspended all 6 accredited good delivery refiners from gold and silver. So far, that has had no effect on the efficiency of the London market, partly because Russian gold production makes up about 10% of the global market.
Have the sanctions had an impact on gold supply at all?
So no, it makes up about 10% of the global production. So Russian being removed, in many ways, this was being priced in anyway as the sanctions were coming out. And also, I think we worked quickly to try to show leadership and demonstrate what is good for delivery as the market was starting to make decisions for itself in light of sort of clear sanctions against commodities.
And these days, investors and traders are increasingly concerned about ESG. Is the gold market responding to these concerns, for example, regarding the integrity of the supply chain?
Absolutely. So we're actually holding an event at the end of the month talking about sustainability and really bringing the climate conversation to the precious metals market. Something we're familiar with is certainly responsible sourcing and wanting to avoid funding conflict. I think an interesting part of that discussion for those of you who join us, be it online or in London, at the end of the month, is really investors voting with their feet when it comes to things like the Ukrainian crisis and taking decisions within themselves that go above and beyond what are the strict legal requirements of sanctions.
All right, Ruth, great to catch up with you as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.